While I was at Apple, I was in this top secret business group. I actually made my first angel investment to get back into the startup ecosystem. I remember seeing the deck for Liquid Death and passing on it and thinking that just seemed ridiculous. It's a big red flag for me if I ask a founder, how do you think you'll eventually exit this company? And they'd say, I invest at the intersection of technological and generational shifts. It's companies, products, ideas that are building for humanity of the future.
How do you advise your founders on thinking about, are these investors the right people to go into business with?
I always say, once you give your equity away, you can't get it back. And so be really careful and conservative. Do your diligence on the investor.
Emma Grede went viral for saying that women pitch with purpose and men pitch for profit.
Insights I've had from working with women is feeling like fundraising is...
Do people need the investment banking background to start investing?
When you're investing in early stage companies, there's actually not enough numbers to be able to take a financial lens on making a bet. You're actually making a bet on...
I'm Ruffin, and this is Bridge Club, the girls' club of venture capital, bringing you into the rooms where deals actually happen. Today's guest is Amy Musavi, the founder of Mallow Partners. She invests and advises businesses across AI, consumer tech, CPG, and more. Before Mallow Partners, Amy was an early team member at Snapchat pre and post IPO, where she built the global consumer insights function from scratch. She later served as SVP at Anthos Capital, a $4 billion venture fund. In today's episode, we're covering all things investing, from why Amy started angel investing to where she finds opportunities, how she actually evaluates angel investments, and exciting trends she's seeing in market today. This episode is perfect for anyone curious about making their first investment. So let's get into it. And remember, if you enjoyed this week's episode, make sure to like and subscribe so I can share more conversations just like this. This episode is brought to you by Vanta. If you're a founder or investor, you know startups move incredibly fast, and especially so in this era of AI. Startups in my portfolio are attracting enterprise customers much earlier in their life cycles. But these enterprise opportunities come with compliance requirements. So working with Vanta can literally make or break 6- and 7-figure deals. Vanta automates the painful parts of compliance like SOC 2, ISO 27001, HIPAA, and other frameworks so you can focus on building instead of drowning in audit paperwork. With AI changing regulations and buyers' expectations, Vanta continuously monitors your compliance so future deals are never blocked. Vanta knows what's needed and when, and they've built the fastest, easiest path to get you there. That's why fast-growing companies like Ramp and Cursor get in compliance early with Vanta. And right now, Vanta is offering $1,000 off for Bridge Club viewers. If you're building something for enterprise customers, go to vanta.com/Ruffin or check out the link in the description. And huge thank you to Vanta for this partnership. Amy, welcome to Bridge Club.
Thanks for having me.
You were early at Snapchat, then you went on to Apple, and then you were an investor at a multi-billion-dollar VC fund. And along the way, you started personally angel investing. So tell us what inspired you to start investing yourself.
Yeah, so I feel like I had kind of an unconventional path in that I didn't even know what investing was.
Same.
In my career. I mean, if you plopped me straight out of my college graduation and said, what is venture capital and what is investing, I absolutely had no idea. I had no background in finance. I've never taken a finance class, an accounting class. So I sort of stumbled into this. When I graduated with a degree in cognitive neuroscience, which is essentially the science of how your brain works, how people think, how people make decisions on what they do and what they buy, et cetera. And so I took that with me into a career in consumer insights and trend forecasting, which sort of led me through my time at Snapchat and then at Apple, really taking a 10-year view on what the product roadmap at a company like Apple should look like. And so I've always been really obsessed with the future and what consumers are going to be buying and using and loving and how they are going to spend their time in the future. And so I've almost always had this orientation for the future, and that's why investing has become really exciting for me and I think a really good fit. But I totally stumbled into it. I think we're going to talk about how I made my first angel investment, but I didn't know that this was a viable path for a career.
I mean, I think most people had no idea. I first learned about, I had worked at a venture-backed startup, but then when I went to business school, I was like, oh, like there's this whole career path in venture capital. I had no idea that existed. And then I also learned, oh, hey, you can actually start investing with your own money, which just this whole new world opened up to me. So tell us about your first investment. How did you learn that you could do that? How did you stumble into that?
Yeah. So while I was at Apple, I was in this like top secret business group, and I'm such an extrovert and I love meeting people. I love sort of being out in the world and being in this role that was highly confidential and really not meeting people that were outside of Apple. I was really missing that startup world and the startup ecosystem. So I actually made my first angel investment to try to get back into the startup ecosystem. So it was less about the financial returns and it was more about how can I help, whether it's through my resources, through people I know, through my work in consumer insights, my work in product, how can I actually help startup founders? And so my first angel investment was actually into a CPG company because that was the category that Apple did not deem competitive because everything else, music, fitness, any mobile app, any hardware was sort of off limits for me. And so CPG was the one category that I was allowed to invest in. And that totally dropped me into the world of consumer brands. And I started to learn from there. And that ended up parlaying into a role at a big VC fund. And it just sort of all rolled on from there.
So to your earlier point, a lot of at least like professional VC investors often come from these like investment banking, finance backgrounds, but you have this super cool like operating and consumer insights background. So how have you seen that be an edge in your investing? And do people need the investment banking background to start investing?
Of course, it helps to understand finance, basic finance. But when you're investing in early stage companies, there's actually not enough numbers typically to be able to take a financial lens on making a bet. You're actually making a bet on the consumer problem and the human insight, at least in consumer investing. And so I do actually think the world of consumer insights is really valuable in evaluating companies and opportunities and founders, because ultimately you're thinking about, does this make sense for the world? Is this going to make sense 5 years, 10 years from now? Is this something that people actually want? And that's a consumer insights problem, not a finance problem. I do think in the later stages of investing, when you're creating your own financial models, you're diligencing many years of data in a data room. Of course, having that background is incredibly valuable. But in the early stages of investing and in consumer investing, I actually see that people who are operators, former founders, people with creative backgrounds, and people who have like a lot of diversity of thought and diversity of experience actually do really well in early stage investing.
Yeah, definitely at the earlier stage.
Yeah.
Like most numbers are just big assumptions.
Projections.
And so I completely agree. You don't need some technical background in investment banking, perhaps when you're like in the later stages of investing, but definitely not at the early
and don't
stages.
get me wrong, like there's moments where I've said, I really wish that I had a background in finance. I wish that I had spent time in that world previously. But again, I think that diversity of thought actually became an unfair advantage.
Okay, so as we know, angel investing is incredibly risky. I think it's something like 90% of startups end up failing. So would be curious to hear like how you've thought about building a portfolio of angel investments and how you think about how it fits in with your broader financial picture.
It's incredibly risky. You have to be willing to, count that investment as zero for the majority of your angel investments, especially at the early stage. But also, if you see it as an opportunity to get in the door at an early stage, often you're going to see early stage angel investments that you make, you might see a 50 to 100x return on that investment. And so ultimately, you just need one in your basket of portfolios to make it make sense. And I think the common knowledge around that is to develop a portfolio of 15 to 30 companies. I have 18 companies in my portfolio and still investing actively. And so, you really want one or two of those to return the full thing. And so it's really about diversity for angel investing more so than, doubling down on a specific investment.
How has that looked like in practice for you? Do you target a specific number of investments per year to build your portfolio?
I tend to be pretty opportunistic in that I have really strong perspectives on my investment thesis. And so if I see a company that fits in that investment thesis, I will definitely take a closer look, even if I've already sort of exhausted, my annual budget for angel investing. So I try to be really opportunistic. An example is, late last year, I really wanted to make an investment in the fertility space and the women's health space. And so I spent 2 weeks talking to as many founders as I could who were building in that space, ones that were fundraising, ones that were not. And I ultimately made an investment like December 15th of last year because I had a lot of conviction and I had done a lot of the upfront work in diligencing the category and the problem space before I even went and talked to any founders. And so you don't want to just throw your money away because you said you were going to do 4 investments that year and you only did 3,
Totally.
Yep.
So as you mentioned, you invest across a range of sectors. So women's health, CPG, AI. Why can you share a little bit more about how you formed your investment thesis and the common thread you see across the categories you are investing in?
Yeah. So my overarching investment thesis is I invest at the intersection of technological and generational shifts, right? So really it's companies, products, ideas that are building for humanity of the future. So what that means is I will look at companies and products and ideas that are really, really deeply invested in where humanity is headed and less so solving for problems of today. That filter allows me to look at everything across consumer, but with a really pointed lens around point of view and perspective. And I have other, sort of sub themes within that and categories and ideas and points of view around, the movement from east to west in technology, for instance. If you look at things like social commerce and live shopping and trends that have like really taken off in Asia that we're still sort of waiting for them to play out here in the US. And then, people are living longer and humanity is living longer and there are implications on care, there are implications on health, on longevity and expanding health span. And so there are a couple of areas that I'm just really interested in and that I love to meet founders in. I developed the thesis over time. I mean, I spent a lot of time like thinking about where the world is headed across technology, across society, across climate and the environment, and where do all of these things intersect 10 years from now? That's where I'm really, really excited. But it took many years of doing a lot of trend forecasting work to develop a point of view on what that future is going to look like.
Yeah. Any advice for someone that's trying to kind of distill down and create a personal investment thesis? Like, where do you start? Because it can feel very overwhelming.
It can feel really overwhelming. And I think that headlines in tech and venture can be a bit distracting because you can see, oh, women's health is a really great area. I should start investing in that. This type of AI, vertical AI is really interesting. I should start investing in that. Everyone else is doing the same thing. So I would really lean into where you have a personal insight. Fertility, for instance, was an example of a space that I spent the last couple of years personally deeply in that space. And by the end of it, I felt like I had enough know-how to actually be able to diligence in the space for consumer healthcare. And so having a personal point of view or an experience that really drives an instinct, start from there. You'll gather more data points over time. But I think there's a common trap of just investing in everything that's in front of you, especially in angel investing. So I think after you have a few reps under your belt, like really start to develop a point of view on what good looks like for your own portfolio and what you ultimately want to pass on. And it's a really good reminder that you should be passing on more than you should be investing in. It's easy to get really excited and seduced by opportunities that are right in front of you.
Yes. Yeah. Sometimes I catch myself being very excited after a founder call and I'm like, okay, I need to take a step back here and think this one through.
Yep.
Can you share to that point? So you invest primarily at pre-seed, seed, and some Series A, or primarily?
Yeah, pre-seed to Series A.
Can you share a little bit more around how you think about evaluating startups at this stage?
I don't really have specific hard and fast rules broadly, but for CPG, for instance, I really like CPG. I have 2 investments I made in CPG, and then I have many companies that I advise in the CPG category. So I really love the space. That being said, it's really hard to get to your first million. And so from an investment perspective, I only invest post $1 million in revenue. And I had to sort of set the bar somewhere to be able to try to get to that point of scale. On the tech side, it's way more textural, I would say. So it really depends on the founder fit, why they're the right person to solve a certain problem, what the competitive space looks like. And for tech in particular, I'm willing to go earlier, but CPG is one where I do have a sort of a minimum bar. But the main filter for me is my investment thesis. So does this founder or this product or this idea, are they building for a problem in the future and not a problem for today?
And at the early stages, as you've mentioned, the team and the founders are incredibly important and a key thing of what you're looking for when you're investing. So you've obviously invested in a ton of founders as well as advised many, many founders across different sectors. Is there a pattern you've noticed in the ones that do excel and really succeed?
Yes. I think there's this like really amazing combination of speed and precision that I really appreciate as an investor and an advisor. So willing to move extremely quickly. And you can see this even in email communication, how quickly they get back to you on text or email.
It's the little things.
It's such an important but small signal to pay attention to, because when times get tough, you want to know that this person is really available. And then precision. So I think having a really good sense of what the blind spots are and knowing when to pick up the phone and call and ask someone and knowing what they don't know themselves, and moving with a lot of speed and precision. That's probably the thing that really stands out with founders that tend to do really well versus the ones that are really taking their time on everything. This is not the stage of your business that you should be really, really slow.
Yeah, I feel like the small things of like, how fast are we getting back to like an investor intro? Like people are paying attention and noticing those things. So it's a good thing to know as a founder.
Yeah,
too,
absolutely.
For sure. So you've mentioned you've spent years thinking about how you frame your investment thesis, but you've also spent a ton of time thinking about how you actually diligence startups and your process for that. And I know you've shared a ton of like advice for me around like the frameworks for building that. So would love if you could walk us through your process and how, you know, others might want to think about these things.
Yeah. So for me, it always starts with the founder. Is this the right person to be building this company at the right time? And it's not always yes. The answer is not always yes. And there's so many reasons that this could be the right problem, but the wrong founder. Or there might be a solo founder that I feel really would benefit from having a co-founder, because being a solo founder is incredibly hard.
So hard.
A lot of investors won't even back solo founders. And so when you're setting up your company, I think about all of these things. Someone to really pressure test your decisions, someone to pick up the slack when you, for one reason or another, can't, someone to really balance your skill set. So I really think about founder dynamics a lot. And then, you know, are they oriented towards an exit? And are they thinking about an exit from the early days? Because that actually changes how you build a company.
Totally. It's so funny because I feel like some investors are like, if I see like an exit slide on a deck, like it's an immediate no. But the reality is we're investors. The goal here is to make a return. So I agree with you. Like there needs to be like some kind of thought process around what's the end goal here for folks.
It's a big red flag for me if I ask a founder, how do you think you'll eventually exit this company? And they'd say, oh, I don't know. I'll think about that later. I want them to have a really strong point of view and then say, but I'm really in this for the long run, for 5, 7, 10 years. I want to know that their heart is really in it, but I want them to be really focused on what that exit might look like and having the right conversations with the right people along the way.
Totally. There's a balance because also there's a process to run for whatever exit opportunity you're running. So like you do have to start thinking about those things probably sooner than you realize.
Than you want to. Yeah.
Totally.
And then I think there's this element of the founder's character and grit. The grit is really important. Fundraising is incredibly hard. And if you don't have that backbone, it can really break you down. It can really tear you down. And so I'm looking for someone that I know can just push through the really hard times, because there will be hard times. And that's tough. I wouldn't say I see that in every founder that I meet.
The fundraising is just brutal.
It's
honestly.
brutal.
And I do think I've seen some founders that have maybe advantages of like working in venture before, that I feel like they just understand that rejection is just part of the process.
It's a part of it. 100%.
And that's just shitty. No offense to you. There's so many reasons why an investor could be saying no, but just being able to like be strategic about how you're going to run the process, I think could be a huge advantage for founders. But I do think there are so many founders that don't have access to this world of venture And so finding partners like you, Amy, that like have this incredible background that can advise their portfolio founders on fundraising is just huge.
Yeah, I think having an advisor or again, having a co-founder, because it can be really tough on your ego hearing no that many times. And you just need to like build yourself back up and have that backbone and grit.
Totally. So I think a big question, especially when folks are getting started investing, is how do you actually like find investment opportunities? How are you meeting founders? So now you're incredibly networked and I feel like get amazing inbound deal flow. But when you first started, how did you really tap in to this world?
It starts with being really helpful in the ecosystem. So rather than just taking and wanting the deals, thinking about what is something that's unique and valuable that I can offer to this world and this ecosystem and starting with that. So for you, you have this incredible following and content creation is such a natural thing that you bring that a lot of investors don't. For me, it was this background in operating and VC and consumer insights. And so I really started by just trying to help founders, whether it's making introductions, helping them think through their, target market launch, their consumer insight strategy, introducing them to other investors. So I spend a lot of time just like developing that ecosystem. I host a lot of dinners and breakfasts and try to bring people into that ecosystem so that when they are fundraising, I'm one of the first phone calls. But it takes time. I mean, you have to put yourself out there and you really have to be helpful to that ecosystem, not just trying to get into every deal.
Yeah. I feel like being supportive and just adding value for many years before always ends up coming back to you. So it's even outside of investing, a really good perspective to take on business and relationships. So I love that. Okay, so we have team. Another big thing of angel investing is market sizing. So like, how do you think about, is this company building in a market that is big enough where like this could make sense to put my capital into this startup?
Yeah, I think it's really important. I think, again, it's really easy to get caught up in these super niche ideas that have really high price points and think that that's how you can make it work. But venture scale businesses have real requirements, right? You don't want to back a company that's not going to have a venture scale outcome. And so you have to pay attention to TAM. It differs obviously for CPG to tech, but I do the math. I mean, I tend to work backwards from an exit scenario planning. So what are the benchmarks for this category? If it's a CPG company, okay, I'll look at some other comps in that category. If it's beverage, I'll look at the last couple exits in beverage. I'll see how long it took them to get there. And then I work backwards from there on what I think is possible. Tech is the same. Tech is changing really rapidly right now. And so it's almost harder to manage how big it could be. But I tend to work backward from the exit math and see if it really makes sense. But you can still be wrong. I mean, there are categories that many of us have just said, this doesn't make sense for venture, and we've been proven wrong. And so there's always like the possibility of those outside edge cases.
Wait, any examples of an edge case that comes to mind that people always believe did not make sense for venture and then there was a great outcome?
I mean, Liquid Death is I remember seeing the deck for Liquid Death and passing on it and thinking that just seemed ridiculous. Yeah. And now not only do I know many investors in the team behind it, it's just one of those edge cases where they had a very unique insight about consumers and were able to turn that in with like brilliant marketing, turn that into a massive venture scale business that will likely IPO. And so that's probably a really interesting one that I personally passed on and didn't think it was worth my time.
Yeah. So is that your anti-portfolio?
That's my anti-portfolio.
Yeah. That's a fun one to see early and be like, oh, these dummies. And then it's like, oh, shoot.
I know. Liquid Death is always the one. And so now I feel like it's messed up my head because now I'm looking for the Liquid Death type companies.
Yeah, which we've looked at one company recently that
like,
comes
is
to
this
mind.
a Liquid Death type company?
Yeah. So Gen Alpha is a place that you've been following and interested in. Tell us more about your unique insight into that generation and what you're excited about investing in Gen Alpha.
So I'm really obsessed with generations and how they differ. And, as someone that was born into the world of the internet and just seeing the opportunities that opened up, what education looked like for us being in college and having the internet at our fingertips versus our parents' generation, and then seeing just the incredible career opportunities from the internet and technology. We're seeing that with AI now. And Gen Alpha is sort of born into a sense of comfort with AI, and they're not really going to remember a time where it didn't exist.
It's insane.
It's insane. And Gen Alpha was born after 2012. And so the oldest ones are like 13, 14 years old. They're now at a time where they're understanding what money is. They have AI tutors, they have AI companions, and they're going to start developing their own spending power. And so I think it's a really powerful group of individuals to pay attention to, not just in terms of what the consumer products will be and technologies will be that they'll use, but even just who they are as founders. So if you look at Alpha School, for instance, that's sort of like flipping education on its head and really focused on what AI might look like in the world of education.
For people listening, can you give a quick context of what the school is?
What Alpha School is?
Because this blew my mind.
Yeah, Alpha School is a really interesting concept. It's highly controversial, but essentially the idea is that kids in this new world need to have just 2 hours of highly personalized like AI education over a screen. And the rest of the day is spent doing like social activities and being outside. I mean, I'm at an age where we have friends in town who are considering sending their kids to Alpha School. And it's really interesting. I mean, I think it will create like a very interesting A/B test on what education in our old world looks like and what this new type of education will look like in terms of kids' happiness, in terms of their success. And, I think it remains to be seen what makes sense.
Totally.
But it is a really interesting concept. And I think we'll also start to see like Shopify for kids and platforms that are trying to create opportunities for this Gen Alpha generation.
So wild.
So crazy.
I don't know if I want my daughter to be an A/B test of the Alpha School, but it is fascinating.
It's fascinating.
I'm very curious to see. And they've opened like all over the country and are opening in Santa Monica maybe next fall. So very curious to follow and see how that goes.
It's crazy.
Really fascinating
Crazy
stuff.
times.
And I think more of them are popping up. So you've made just under 20 personal angel investments. Of those investments, who have been the breakout companies or the breakout company? And even if you can't say names, curious like what you've noticed or taken away from following that company and how you're applying that to investing.
I'm really lucky. I have a lot of bright spots in my investing portfolio and my advising portfolio. I think the ones that really stand out have this like really ruthless nature about their obsession with their customer. And it's almost an insatiable curiosity about their customer and what that customer thinks when they wake up in the morning, what they think when they're going to bed at night, what are the problems and challenges they have throughout their day, and really wanting to understand them and how they can serve them, and really focus on the customer more so than the product. Mm-hmm. That allows you to create this like very natural engine for product development and product innovation into the future. Because if you're over focused on your current product and just fixing it, you're not really thinking about growing with your customer over time. And so the ones I've been really thrilled about are incredibly thoughtful about that. And again, it's like very insatiable. They can't get enough of their own consumer, even if they don't have even their first paying customer yet.
And I feel like if you understand the customer deeply, you can improve the product. So that comes after.
Exactly.
Are there any like specific examples of ways you've like noticed that when you're meeting founders?
I think particularly with highly technical founders, sometimes there's a disconnect between their world. They might be, living on campus at MIT or Stanford and have yet to have a ton of very rich life experiences, yet they're building a consumer technology product. And so in those cases, I think it's really helpful for them to get out into the world. And this is where consumer insights becomes really helpful, like doing ethnographies, spending time with their target market and deeply understanding them. Because when you're really technical and you're highly focused on the dev cycles of your product, it's really easy to be out of touch with who your eventual customer will be. And if you're 25 years old and you just haven't had all of those life experiences.
Yeah, totally. Any like current categories that you are excited about or watching or looking to make an investment in right now?
Women's health has been really exciting. It's, as we all know, it's very underserved, under-researched, undercapitalized. But lately there's been a lot of exits and momentum and funding for the category, which is really exciting because I think we'll start to see even more wins in the category and more comprehensive offerings for women. So women's health for sure is really exciting. I am still just really obsessed with the world of longevity, and that comes in so many different forms. From pure healthcare to CPG to care for retired people. So longevity, the longevity space continues to be really interesting. And then, I mean, I have a few insights around this east to west migration from tech. So today,
what does that mean?
Sure. So technology, if you just take TikTok, for instance, it has made it so easy for trends to travel from east to west. So typically, what I've noticed is a lot of trends will start among teens in Asia.
Mm-hmm.
They will transfer to teens in the US. And then from there, they will become mainstream. So if you look at K-beauty, K-pop, all of these things, 10 years, 20 years now.
Live shopping even.
Live shopping. So that's one, social commerce and live shopping I've been really keeping an eye on. I think Whatnot is really interesting, but otherwise haven't seen any really big players that have emerged or been successful in the US. TikTok Shop, of course, but I think there's a lot of space to build there. And that's an area I'm always really fascinated to be taking a look at. I'm also really interested in AI hardware. I spent a lot of time working on software and hardware at Apple and at Snapchat, and I believe that hardware is the next frontier in AI. And so the same way when I'm wearing my Aura Ring and I'm wishing that I could talk to my granola note-taking app through my Aura Ring, that product, obviously, there are products that do that today. I think there's a lot of really exciting innovation in hardware that needs to happen for our use of AI to be as omnipresent as we want it to be.
The AI wearables going to be very interesting.
Yes.
Curious to see.
Yes.
To that point, so we're in this crazy era of AI where anyone can basically use Claude Code to spin up a product. So I think a lot of people are wondering what does stick around? What are going to be durable businesses in this next era? So I know you're really bullish on CPG. Sounds like some other areas that you're super bullish on. Can you share more about what you think will be long lasting?
Yeah, I think CPG is really nicely defensible against AI. If anything, it really benefits from AI just in terms of supply chain and the data layer. It's really hard to build in CPG, so I won't say that it's easy, and I don't think it's for everyone. It's total
grind. But that, in a way, is a moat.
It's a moat. And that's why I have that $1 million revenue threshold, because I believe if you can get to that number, which is really challenging, the rest you'll be able to scale once you've figured out how everything works. So I think CPG continues to be interesting in the era of AI. And of course, you have to set your expectations around what the upper limits are of an exit in CPG, but I do think it's really interesting.
What are those limits for people?
I mean, Poppy was just at, or Groons was just at 1.2 billion.
Somewhere around there.
Yeah.
Poppy was just under 2.
Just under 2
But those
billion.
are
those
big exceptions.
Exactly. That's really the upper limit. I think it makes sense to think about the 200 million to 5 to 800 million range.
Agreed.
For really strong CPG business across beauty, across skincare, across food, beverage. But of course, we have these amazing examples of billion-dollar businesses.
Yeah. So again, you've made almost 20 personal angel investments. What have been some of the common gotchas or learning lessons that you perhaps made early on in your investing journey that you now look out for?
I haven't really made these mistakes myself, but they're what I tell everyone that's getting into angel investing. Be really careful about stacked SPVs. I'm seeing that a lot right now, particularly with these really hot deals and secondaries that are happening, where you are so far down away from the cap table that you are just getting stacked with fees. And economically, it might not even make sense, even with a huge return, for you to get into that investment. There's so much hype right now with AI. And so the valuations are just astronomical. Be okay with saying goodbye to that investment, of course. That's probably a gotchas.
And I feel like oftentimes it's hard to even know if it's a stacked SPV. So when you are seeing these opportunities, like asking details on the structure,
Exactly.
the fee structures, just make sure you're like really digging in to understand who has the direct cap table access. Because there was even, I don't know if you saw the Anthropic headline that came out that basically they're making void any kind of secondary transactions. And so I think there's going to be a ton of fallout.
Yep.
And like, there's just a ton of uncertainty around like, do you even have ownership in these companies, even if you're okay with the high amount of fees it takes to get in? So Emma Greed went viral for saying that women pitch with purpose and men pitch for profit. So I'm curious, in your years of working with both female and male founders, what are some of the differences that you've noticed between the two?
I don't want to make a generalization, a sweeping statement about all women, of course, but one of the nuanced insights I've had from working with women, either through investing or advising, is feeling like fundraising is asking for charity.
Totally.
And asking for donations.
You are giving people an opportunity.
It is a two-sided transaction. They are being given the opportunity to grow and scale with your business and participate on the economics on the other side. For some reason, that is just more uncomfortable for women. There might be like a genetic reason for that, where it feels like a favor, like you're asking someone for a favor when you're asking them to invest in your company. And I just don't see that as often with men.
How do you advise founders on like not framing it in that way?
I think it's just a mindset thing, right? Yeah. It's just getting in that mindset and reminding founders that they have created this incredible company or idea, and they are in control of who gets to grow with them and who gets to be there and be on their cap table, sit on their board through this whole chapter. And that in itself is an incredible opportunity that they're giving to these investors. And so I think it's just a mindset shift.
Totally. And to that point, I think founders should be diligencing their investors.
Absolutely.
In a way too. So how do you advise your founders on thinking about like, are these investors the right people to go into business with?
I always say, for the most part, once you give your equity away, you can't get it back. And so be really careful and conservative when you're building your cap table and thinking about who's going to be with you on this 7 to 10 year journey. It's a long time, and you're going to have hard times. Every company does. And those are the people that are going to be calling you when that happens. Sometimes you're in a fundraising environment where you have to just take the money. And I understand that. But if you are fortunate enough to be really selective, do your diligence on the investor and make sure.
Take reference calls. Call other founders that have taken their money. It's so important.
It's great.
Again, if you are lucky to be in that position, but hopefully get yourself in the position to be in that position. Okay, let's move to our rapid fire round of questions. So what is some advice that you ignored in your career that has turned out to be true and you wish you had followed?
I was told early on that relationships are everything in business, and I totally discounted that for probably the first decade of my career. I was so heads down, really focused on the work, really focused on delivering the best work I could. And when I landed in the world of venture, I realized really quickly that it's all relationships. And so I've had to sort of rework my thinking around what my work really is. And today my work is relationships, but it took me a while to get there.
Completely agree. And it goes back to your earlier point of adding value to the ecosystem. I think that's such a unique, special way to build relationships that I also...
And it's free.
Exactly.
It costs you nothing to be helpful to someone.
And it always comes back to, and I think it's like, also, I wish I had invested in that so much earlier. Mm-hmm. So that's great. Okay. What is your secret to getting past imposter syndrome?
I don't think I'm past it.
I don't think any of us are.
I think that when I get tripped up on that, I remind myself that we all have it. Yeah. Even people that you look up to have imposter 100%. Syndrome in one situation or another. And I also think it's like a healthy feeling. I think it means you're in a growth phase and you're in the right room and you're going to grow from this experience instead of it being a negative that's going to like put you back in your seat.
Who is a woman that has been the biggest advocate for you and your career?
Besides you. I love this idea of having like a personal board of advisors, not necessarily for your business or anything, but literally people in your personal life that complement each other in terms of different ways that they are looking out for you and supporting you. So I'd say it's a collection of women and a gay man and, you know, people that are opening doors for me that I can pick up and call if I have a really big decision that I'm making. And I tell every founder to, again, it's all about that support to get you through the tough times. So start early and start building that personal board of advisors.
Yeah, I love that. I'm like trying to think through who's on my personal board of advisors. You definitely are.
Thanks.
And then finally, what impact do you want to leave for the next generation of women?
I would love for the on-ramp to be shorter. I think that I learned so much after a decade into my career that I wish that what is investing? What is angel investing? What is venture capital? So I think education, which you're doing a lot of with Bridge Club, I think is so important for women who are really, really early in their careers about what all the possibilities are, because it just took me too long to get there. I'm so happy that I'm here now, but if there's one thing I could take from my experience and bring to other women is that shortening that on-ramp.
Totally. Like when I was graduating college, it was like Deloitte is the only job opportunity for you. And it's like, no, there are like so many other paths here. But hopefully like with the world of the internet and like everyone sharing different education and thoughts online, we can bring that impact to the next generation of women. That would be amazing. Well, Amy, this has been so fun. Loved having you on the show. Where can everyone find and connect with you?
Thanks, Ruffin. It's been so fun to be on Bridge. You can find me on LinkedIn. You can find me online. Just look me up. Eventually you'll convince me to have a TikTok account.
We're getting you there. This might be your hard launch.
This might be the launch of my TikTok account. So look for me, Amy Musavi.
What about folks that want to pitch you?
Find me on LinkedIn. Send me an email, amy@malopartners.com.
Love it.
Yeah.
All right. Take your shots.
Can't wait to see what you're all building.
Amazing.
Yay.
Thanks, Amy.
Thanks.